All right, welcome back. Today we're putting Palantir stock, that's ticker PLTR, up on the examination table. We're going to give it a full technical checkup, diagnose its current condition, and see what the charts are really telling us. So let's scrub in and get started. So, first things first, let's look at the patient's chief complaint, the main symptom. The stock has taken a pretty serious tumble from its 52-week high of over $207 all the way down to about $147. That's a big drop, and that's the core problem we're here to investigate today. So here's our game plan, our diagnostic process, if you will. We're going to check the trend's vitals, read the stock's mood, follow the money flow, and then, at the end, we'll put it all together for a final technical diagnosis. Okay, let's start by checking the most basic vital signs, the price trends. We need to know just how serious is this condition really? To do that, we're going to look at moving averages. Now, you can just think of these as the stock's pulse. They smooth out all the day-to-day noise and show us the average price over different timeframes. It gives us a really clear picture of the trend's overall health and, more importantly, its direction. And wow, when we take that pulse, the results are, well, they're not great. What's so striking here is the consistency. Palantir's price is trading below every single key moving average. Short-term, mid-term, long-term, it doesn't matter. The story is exactly the same. This stock is under some serious pressure. And this right here, this really puts a number on the problem. We get what's called an MA alignment score of -3. Now, that's just a technical way of saying that all those averages are stacked on top of each other in a perfectly bearish formation. This isn't a fluke, it's a textbook established downtrend. And you might be wondering, okay, but how strong is this downtrend? Well, it's not just some lazy drift downwards. We can measure its horsepower with something called the Average Directional Index, or ADX. It comes in at nearly 28. Anything over 25 is considered strong. So the big takeaway here? This downtrend has some serious muscle behind it. Okay, next up in our diagnostic process, we're going to try to read the stock's mood. We know the trend is sick, but is the patient, PLTR, just getting completely exhausted from all of this relentless selling? And this is where the story gets really, really interesting. It's a tale of two completely opposite signals. On one hand, you have the MACD indicator, which is basically screaming that the bears are still firmly in control. But on the other hand, you have indicators like the RSI and stochastic, and they're suggesting the selling has gone way too far, way too fast. It's a technical tug of war right in the middle of the chart. Let's just zoom in on one of those for a second, the Relative Strength Index, or RSI. Sticking with our medical theme, you can think of this as a stress test. It measures how quickly and how hard the price has been moving to tell us if a stock is getting bought up or sold off way too aggressively. And just look at these readings. The RSI is down at 27. Anything below 30 is considered oversold. And the stochastic indicator? It's at a ridiculously low 8.10. These numbers are basically the chart's equivalent of a high fever. It doesn't mean the illness is over, but it's a huge warning sign that the body is under extreme stress and some kind of reaction, like a bounce, could be coming. So we've got a really strong downtrend, but it might be running on fumes. So the next logical question is there any real conviction behind this drop? Let's follow the money and find out. While the evidence here is pretty clear, and it's not good news for the bulls, the relative volume is 1.85. That means Palantir has been trading at almost double its normal volume during the sell-off. When you see heavy volume on a down move, it tells you there's real belief behind the selling. This isn't a leaky faucet, it's a fire hose. So the crucial takeaway from our money flow analysis is this. This isn't some weak, low-energy drift. The recent price drop is happening with a ton of conviction. People aren't just tiptoeing out of this stock, they are running for the exits. Okay, it's time for the final consultation. We've checked the vitals, we've read the mood, and we've followed the money. Now it's time to put all of these lab results together and come up with a final diagnosis, and maybe a potential treatment plan. So after running all these tests, after looking at all the evidence, what's the final word on Palantir's technical health? And the score is in, 75.00. Make no mistake, that number confirms a decidedly bearish technical profile. The weight of the evidence is clearly pointing downwards. But here's the summary that really captures the entire story. The sickness is that powerful, confirmed downtrend. But then there's the glimmer of hope, the fact that the stock is completely exhausted to the downside with that crazy oversold RSI. And this tension, this battle between these two opposing forces, is what makes Palantir's chart so fascinating right now. So, what's the doctor's prescription? Well, it's all about watching these key price levels. Think of them as the battlegrounds. For the patient to even begin to stabilize, it has to reclaim that pivot point at 148.60. If the bears stay in control, the next potential floor is down at 145.81. And if a recovery starts, the first big hurdle is that resistance at 150.56. And for anyone watching for that glimmer of hope, that potential oversold bounce, here's our checklist for recovery. Step 1. The price has to reclaim that pivot point. Step 2, it needs to bust through resistance. And step 3, we need to see our stress test indicator, the RSI, climb back above 30. That last one's the real confirmation that the fever might finally be breaking. But we have to end with a crucial dose of reality here. A short-term bounce is one thing, but the underlying condition is another. And until this stock can fight all the way back up and reclaim its 10-day moving average, which is around $159, the path of least resistance is, unfortunately, still lower. And of course, as always, please remember that this analysis is based on our source material's technical indicators. For educational purposes, it is absolutely not financial advice. And all of that brings us to the one big question this diagnosis leaves us with. Is this just a temporary fever, an extreme oversold condition that's ready to snap back? Or is this a more chronic condition where that powerful downtrend is ultimately going to win out? The battle lines are drawn, and only the charts can tell us what happens next.